There's been a pretty big shift in the car insurance world that's actually going to be in your benefit. This is a little bit of a mini explosion. If you imagine a little ripple that creates a major wave, this is what's happening in the insurance industry that's going to help a lot of shoppers get better rates on their car insurance. If you've seen any of past videos, I know there's a lot of negativity right now because since 2020, when we had the pandemic, insurance rates went straight down. It cost less. No one was driving. It was great. As far as like the cost, it was horrible to live. But in general, it was a really good way to have a lower cost, right? So we didn't need to drive, all the things. Going out of 2020, all of a sudden, no one knew how to drive, so higher medical bills, higher injuries, higher death rate, more expensive cars because we could afford them at the time. The cost of repairs went up, the mechanics charged more for repair. Literally just probably 100 things that had changed on top of an inflation, and an inflation again, and inflation again. So in general, the cost of car insurance has gone up over 50+% from 2020 to 2025. But what I've predicted is starting to come true. Even since 2021, we were talking about how there's going to be a little bit of a ripple and a wave and a little bit of a legal battle going on. So what's happening is, one, the insurance companies are starting to show profit again. A 50% increase wasn't because they were being greedy in some companies, but 90% of them will say weren't. They're trying to not go insolvent, which means bankrupt. And when all of those claims came in and all of the payouts started happening and they weren't making a profit, some of them ate the cost and now they're starting to pay that later on, realizing that it's not changing. What they needed to do was change the models, change the risks, change the location, essentially remap their products. And you're starting to see that with many companies. There's a lot of companies that have gone up 30, 40% just in one big hit. That's because they said, you know what? Let's just do this now, get it out of the way. We're going to be higher than everybody else for the next year and a half, which was a few years ago. And now they're competitive because they've remapped the product to match what the new industry was like. The thing that's happening, that started to happen, is these companies are starting to show profit again. What's going to happen is, because the economy is not necessarily showing profit, we're not growing, inflation is still going up, all of those pieces are at an accelerated rate and they're starting to change, but the unemployment rate has risen, and so there's a lot less income to be passed. Whenever something major happens, the first person that we look at is who has the money. Insurance companies typically have the money. And so in these scenarios, they're going to probably find that there's going to be a lot more lawsuits against too high of a premium for the policies that they're getting. Now that's going to take a few years because they have to go through the map, and right now they're just profitable. They weren't profitable for several years, and they're just becoming profitable to where they're actually making income back. If everything goes back to pre-2020 era and goes back to 2018 where the risk is low, there's not a lot of weather-related claims, there's not a lot of bad things. We've learned to drive again, we're starting to get better. That has decreased as far as the death rate, as far as the injury rate in car accidents. So there's a benefit to that. As that starts to go down and the cost of materials goes down, and when the economy goes down, people buy used cars, so there's less cost of repairs. All of those things start to slowly creep back down to where they should be. If these insurance companies don't adjust those prices, they're going to get sued. They're going to be the one that everybody goes after and say, we want our money back. But that's not even the ripple that we're talking about. So that's essentially going to help the market grow. And other companies are going to start to enter the market, which have happened. A lot of the tech companies are in now where they're like, do it digitally without all of the pieces. And so now there's more competition. But now that everything's calmed down, a lot of these companies are starting to level off as far as their prices being competitive again. There's going to be more companies that re-enter the market. So the ripple that we're talking about is something you've seen all over the place. You just didn't realize it. It's Geico. So what the heck are you talking about, Mark? That's just a stupid thing to say. Geico's always been there. They've been there digital. They've only been accessible to a digital market. Let me explain what we're talking about. Let's take Nationwide. We'll also take Progressive. We'll also take Allstate. Let's do all three of them. These are three major companies. So we've got Nationwide first. They used to be like Geico, to where they worked with people individually. They had offices and exclusive agents where they only sold the Nationwide product, and that was their thing. They've since then no longer even offer exclusive. It's all independent agents. That means guys like me can sell Nationwide, can sell Progressive, can sell AAA, can sell Allstate. Like, I have access to most of these companies. And when I take your information, plug it into my rating software, I can look at who's going to give you the best rate based on the coverages that we went with. So now you get the coverage you should carry, and we can see who's going to give you the best deal. Now, we're thinking long term. So for our company, we're thinking, okay, we're not just going to give you the cheapest deal. Who's going to be the best option? We know that X company hasn't raised the rates, so odds are I'd rather pay $10 a month more and have a company that isn't going to be triple my price next year, and I got to go through all this again. So having the right agent that knows what they're doing and working through the market is probably the most important. If you have a local one, stick with them. Hold on for dear life and let them help you. If you don't have one, I'll put a link in the description below where you can work with an independent agent. Hopefully it's one of ours or us, and we can help you out as far as like finding the best fit. Again, understanding the market so that you're not have to constantly do this every single year. Again, Nationwide has had that happen. Progressive, one of my favorite companies as far as forward thinking. They have one of the best pre-planning programs as far as like they want to be in front of everybody. They really have technically two models, in my opinion. They have direct, where you can go to Progressive and buy your policy directly from them. Good for them because they'll let you pick your own coverages, and most people pick the wrong ones, and it's cheap for them. They get a premium. They don't have to pay you half the time because you didn't pick the right coverage, and so on and so forth. That's one way. They have the independent agent, which is where you can go with a person that locally shops with multiple companies. They actually prefer that model because that model allows you to shop with all these companies. And that means if you're with Allstate and you're shopping, sometimes Progressive knows we're competitive in that area. If you're not a fit for them, they don't mind if you go to the other company. But if you are a fit, then they're going to win your business. They have to win the business where they're competitive. And the reason they're competitive is because they're profitable in that location. Again, your profile, your credit score, your insurance score, your claims, all of that matters. That creates that profile. And when they're competitive, it means that you're a fit, most likely, for that company. Now, don't get me wrong, there are scenarios where they try to lock people out because they're too good of a price and that's not a fit, and then it screws up the whole system. It happens every so often, and I've seen it probably 10, 15 times in the last 12 years. But let's go over to the next model. We've got Allstate, who used to be only Allstate people could sell Allstate. They were called an exclusive agent. They could exclusively sell Allstate. That has, like Nationwide used to do, changed so that Allstate now offers that product through independent agents in most areas. Great product, great brand, but now, same scenario, they can be competitive where they need to be competitive. They can get clients where they want. Guess what's just happened? Geico, over the last 12 months, has been working with independent agents. Geico also happens to be one of the most known as far as commercials. They're probably yelled at more than praised, but they've spent the most on commercials, which means they have some of the most exposure. The other part is when an insurance company comes into a market, they don't typically come in at a high price. They will in some areas, and Geico probably is doing a little bit better than most companies where they're not just undercutting the price, where companies like State Farm have always done that. They'll go into a brand new area, say, we want to own this whole area, cut the price down, we're going to be 20% cheaper than everybody, we're going to be the best fit, we're going to do this, we're going to do that, we're going to come over for turkey dinners, like, we're going to be your agent, right? Like a good neighbor, we're going to be there. And then they creep the price back up over time. At least that's what I've seen, in my opinion, of what I've seen them do over areas that I've seen them take over. And it really honestly works because they get in there, love the agent, you like the brand, they're sponsoring the top NFL teams, all of the things, let go of my chicken nuggets, like all of the things that they do. That leads to where Geico has been, they've been competitive with non-preferred type of clients. And so in that scenario, your average American is going to be competitive with a Geico product. But you don't have to go to Geico anymore to get the product. At least they're working on that. So there are multiple states that they're in that they're releasing, and they're working on releasing some in Michigan. They're working on Tennessee. They've got some in Virginia. I think they already have Tennessee. They're releasing some in different states across the US. And because they no longer have to pay for the marketing, They're just allowing the agents to now add their product to their lineup. These agents are starting to get a feel for what is Geico. Are they good? Are they competitive? Do they have that 98 point whatever satisfaction rate that they say they have? How are they going to treat my customers? And so far, it's looking good. What's that going to do for you and me? That's going to create a market where everybody has to be a little bit more competitive. Progressive now has to come down in price, or at least has to compete in some other area, or they just stick to their guns like they usually do, and they're usually competitive anyway. Allstate, State Farm, Farmers, Nationwide, National General, AAA, all of these companies have to be mindful. They don't necessarily have to change anything because they're all pretty good companies in general as far as what they're looking for when you're a fit, right? That profile, who's the best. If that is a fit, they're likely going to have a little bit more competition, and because of that, their prices are going to go down. I would guess that there's at least, I think, 8 to 10 states where us independent agents do have access to. Happen to be most of the states that we're in, which is nice, and we're starting to see that bubble start to shift. Now, that doesn't change the fact that we're probably going to see the lawsuits in a few years with some of these companies that are making too much profit, unless they adjust their rates. So if they bring the rates down to match what they should be, the government's not going to have to step in and say, no, you got to give some of this money back. You're taking too much from clients. That's just not the way we want to work it. I hope this was helpful. If you guys are shopping, there's a link in the description below. If you are looking for a really good video to watch next, I've got a Insurance 101 that goes over coverages. Also, I've got a video here that would be helpful. I'm Mark with Think Insurance. I'll see you in the next one.